Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And unfortunately guys, for the Bears, that little trade setup we had on Thursday did not work well, okay? So on Thursday's candle we got that close below the 380 level. The very next day on Friday we had another Freaky Friday situation where the market makers just switched it up on us in the opposite direction. All right, and we're gonna talk about that and more. Let's go. So guys, like I said in in all my videos, I give us the bull case scenario and I give us the bear case scenario. Okay, and I think in yesterday's video, I try to emphasize to us that, for me at least, it's all about the trade setups. And if one setup does not work, there's always another setup. If one setup doesn't work, hop on the next setup. Okay, these trade setups are a dime a dozen. They're trading opportunities for us to make money, but they're dime a dozen. If one doesn't work, that just like a city bus, you miss one, catch the next one, right? And I talked to you guys yesterday about how on the Thursday's trading day, I tried to buy calls I had a level at 384 I was watching. I tried to buy calls and to get the breakout, because I buy calls on false breakdown setups and breakouts of resistance, and look, it didn't work. I had to cut my loss. And then I switched over to puts because we had a false breakdown setup right there, which worked out very well. There is nothing wrong with being wrong in the stock market. When we're trading with our ego, it's hard for us to accept when we're wrong. You know what I mean? Thank God I do not swing trade, especially in this bear market. I'm not swing trading. But if I was swing trading, to see it break down a critical level on Thursday, that's definitely something I would have entered puts in. I would have swung puts based on that setup, okay? And if you guys did the same thing, I think, in my opinion, that was a good shot to try swinging some puts. The setup was there, okay? But like I said, there's nothing wrong with being wrong. What I do find wrong is if you know you're wrong and you stubbornly hold that position and not respect your stop loss. Now that I find wrong. And look at the beauty of this, okay? We had that breakout, 380 breakdown, we had that breakdown of 380. And technically speaking, if we want to get technical here, that breakdown did trigger a move to the downside, thanks to the Amazon earning serving as a catalyst. But from a technical perspective, breaking down that 380 level did drop down lower, all right? And with some brokerages, you should be able to trade options on SPY till 415, okay? So it did drop down as low as 375.59 before it switched to 415. And then after 415, when you really couldn't trade options, it hit my 374 target, okay? Now, it sucks because this nice move happened after market and it did not sustain. Okay, it sucked for if you was a bear, but guess what? That's what we have stop losses for. You respect your stop loss, you reset your mind, and you find that next trade setup. Okay, that's what I wrote here in my Discord. Bull case scenario, bear case scenario. The bear case scenario is only in play as long as 380 holds as resistant. Okay, I wrote here the bull case is simple. 380 must have captured, giving us a false breakdown setup, and we put the upper targets in play. Okay. SPY ended up popping $9. Now remember guys, I longed the breakouts of resistance using the 15-minute chart. This is a 15-minute chart. Each of these lines represent my support resistance levels. Okay? You can see here, breakout of 380. Breakout 382. It led to more upside. Breakout of 384. Led to more upside. Broke out 386. Led to more upside. Breakout 388. Led to more upside to 390 target. Okay? I feel like my strategy works, but it's not 100% strategy. All we need, in my opinion, is a 51% accuracy. The rest, you gotta manage your risk, and over time, you can be profitable in this market. That's just my opinion, okay? But it will not work if you are not willing to accept when you are wrong, okay? So yeah, I'll admit that false breakdown, that false breakout setup when SPY broke down the 380 level, it didn't work, okay? It didn't work. Anybody who's tell you that their strategy is 100%, run from them. They're lying to you. Ain't nobody, even the best traders on Wall Street, do not have a 100% accuracy rate. Okay, Uncle Charlie definitely doesn't. But like I said, know the setups, know the levels, and just trade it unbiasedly. Okay, and with these levels, even if a trade doesn't go your way, you'll still at least know when you should cut your loss. All right, now let's get into the bear case and the bull case. Okay, I'm gonna start this off with the bull case. Okay, make sure you guys listen to both cases. But the bull case right now is it recaptured that 380 level after breaking it down Thursday, led to a nice $9 pop, and it closed above the 50-day moving average. That's the orange line, and the 50-day moving average currently, as of right now, is at 383.36. It could change by Monday, okay? So, keep an eye on that. But bottom line is it broke out. It recaptured a critical level and it broke out another critical level, 50-day moving average. So now that is a very critical support level. All right. Right now I have it is at around 389 when it closed. I do have support at 388, 386, 384, 382, and 380. Add those lines, those levels to your charts, please. Okay. But the critical level based on the daily chart, you keep an eye on that 50-day moving average. Okay. When it reveals to us where it's going to be on Monday, add that as a line, as a level to your chart and watch it. If it breaks back below the 50-day moving average, that could be a false breakout, putting 380 back in play. And you guys know how I feel about 380. It's a 38.2 retracement level from August high down to October low. Okay, so that's a very critical level. It's also the 38.2 retracement level or fib level from March 2020 low to January 2021 high. 380 is a very critical level. All right. So I think I said I was gonna give you guys the bull case. I ended up giving you guys the bear case. Sorry. So yeah, that's the bear case. Break back below the 50-day moving average. Take out that 380 support level. That's the bear case. I would favor the rally is over. The relief rally from since mid-August is over because we are in a bullish rally for now. Okay. And that would put critical level all the way down to 375-ish. All right, 375-ish, which is this trend line right here. All right, did I adjust it? Hold up. I had it. Okay, so yeah, actually, the support's around 373.3-ish, okay? I messed up. I put it low, messed up here, but I fixed it. Okay, so bear case scenario. Lose that 50-day moving average. Give us the false breakout setup. If we get that false breakout setup, that's our cue to look for puts. 380 fails, that's our cue to look for puts. And that will put, lower price targets in play. I got 378, 375.5 to 376s, and then the 373, I give it a zone, 373 to 374 zone. Give it a zone. And then below that is the 371.5-ish level. That's the multi-year trend line. If that fails, we got 367.84. That's the 23.6 retracement level. Guys, please add these levels to your charts. Now, that's the bearish case scenario. Okay, give us that false breakout setup so we can play some puts. All right. Now, the bullish case scenario, because we are in breakout mode. Okay, as long as 50-day moving average holds, bulls have a chance of more upside. Okay. The next very critical level that I got is the 50% retracement level at 390. All right. If that clears, 392 is back in play. Okay. Above 390, this is a pivot low back from September 13. Okay. If 392 fails, we got 394, 396-ish. I got a level around 398.7-ish. Okay. That's a fib level, 38.2 fib level from January high down to October low. Okay. So that fib level, 398.5 is a 38.2 retracement level. Very critical level there. All right. And 61.8 retracement level at 399.79, but we could say 400. 400 is, definitely something to watch. And of course, that 200-day moving average, guys, it's around 410. Okay, we do got some levels between that, around 403 and 406s. But watch that 200-day moving average for sure. Okay, so remember, as long as the 50-day moving average holds us support, bulls have a shot at more upside. Got to clear that 390 level though for me to get more bullish and favor the relief rally continues. Okay, guys, you guys got my bull case scenario. You guys got my bear case scenario. Okay, it's up to you guys now to do your best and trade it unbiasedly. Triple Q, we also had a false breakdown set up on Triple Q Thursday. It broke down that 23.6 retracing level, the 273 level, recaptured the very next day and got the close back above my 279.5 support level. Okay, so if that support level can hold 279.5, bulls have a chance of more upside. The next critical level I'll be watching is 282 and 285. All right, but if it drops back below 279.5, guys, that's bearish. That's a false breakout setup that we have here. Okay, Tesla, it managed to close above that 225 level that I've been talking to you guys about a lot. So as long as 225 can hold, 230 is the next resistance level. That's a pivot low back on October 18th. And of course 234-ish. Then I have a critical level around 237. If that can clear, we got 241 and 249.6 is above that. Okay, now if 225 fails, yeah, that's a false breakout setup. All right, I got 218 and 216 as support below that, with the very critical level at 213.2ish. All right, below 213.2ish, bears take back control in my opinion. Okay, let me zoom out a bit on Tesla. I'm gonna go to the weekly chart, zoom out a bit. We got an outside weekly candle, a bullish one on the weekly chart. Okay, we got this triangle pattern. You guys see this triangle pattern? All right, with the white lines. It's not a bad setup for calls next week, but at the same time, you still got to manage your risk. Okay, guys? Now let's end this off with the option flow. Filter for 500K premiums or above. And yeah, overall bearish for the SPY like usual. Here's one that interests me. The block order. Usually signs of institution buying. 1.7 million in premium. Over 18,000 in size. 310 strike price December 16th. Very interesting. So we got some people still very bearish towards the end of the year. And 310s are pretty, pretty out there. 98% in puts for Triple Q. Wow. So even though Triple Q was looking bullish yesterday, we still got some, big money people taking advantage and loading up on puts. And Tesla, 55% in calls. Not a lot of options activity for Tesla, all right? All right, so yeah, thank you guys so much for watching. If you guys want more content from Uncle Charters, please consider joining my Discord. Got a coupon thing going. Or if you don't want that much, you just want some morning analysis, definitely subscribe to my Substack for more extra content from me, okay? Thank you guys. Peace.